It's episode 53 and it's Thursday at 11:30 a.m. So we're so happy that you can join us. My name is Sam Thompson and I'm joined today with the one and only Joe Bladek. Joe, how are you today?
Hey, Sam, it's good to be here. Thanks for saying hello. And yeah, it's good to be here. I'm doing well. It's been a real snowy week with the weather we've been having up here in Aurelia. We've had probably over our foot, maybe 2 feet of snow. And yeah, I've been getting a couple workouts here and there with all that going on, but always getting right back into the mortgages, really passionate about it. Yeah. And how are you doing today, Sam?
Yeah, I'm doing good as well. The weather in Barrie's been a bit more fluctuating. It feels like we lost a lot of snow, but I think we got some more back overnight. So, I feel like December's the only month I'm happy with snow because of Christmas. But then, January I'm over it. So I'm still in a happy state that we have snow so that Christmas is still snowy, but yeah.
Yeah. Oh, don't worry. The snow will be here. I know Barrie and Aurelia, they can be very different, but sometimes they can be the same. I'm sure the snow will hit very soon. But yeah, really excited to be here on episode 53.
Yeah.
I mean, as we're getting closer to the end of 2021, it's really cool to see that we've gone through so many different topics, but we have some really awesome news planned for today. I know that we're going to get right into some of the figures here, Sam.
Yeah. Sounds good.
All right, awesome. So just getting right into the figures here with you. Let's start with the bond yield, and I'm just going to share our screen here with all that. Let me just grab that. Let's see. And I lost my share screen button. There it is. All right. So we can you see that all right there?
Yeah, looks good.
All right, perfect. So getting right into today, we're going to jump into a couple different stats, but to give you an idea of what we're talking about, Sam and I have prepared a presentation for you guys about 5 tips to keep your credit score strong during the holidays. And Sam, I know there's a few tips that we were looking at together this morning that this looks really good, and I'm really excited to share these with you.
Yeah, they look like there were some really good tips, and I know that especially in the Christmas holiday season, there can be stress around borrowing and keeping your credit score strong. So I'm happy to, that we had that content to jump into.
Yeah. All right. So first thing, we're going to jump into that bond yield that we've been following the last few weeks here on Canadian Mortgage Weekly. And we actually this week have a chart to share with you as we're going through some of the figures here, just to illustrate to all you viewers what we're looking at. And something that is really interesting to note here is as the bond yield has been climbing since September of 2021, Sam, we've noticed that 5-year fixed rates have really also climbed in tandem with this bond yield.
Yeah, absolutely. It's been it's been a gradual rising, but I think the chart really shows that sort of mirror or that parallel where, going to the end of September into the late fall, we did start to see those rates begin to rise. So yeah, it'll be interesting to see what the next, few weeks, the new year holds as we're seeing it, gradually climb since, last week there was a bit of a low for that dip that you can see on the chart, but we're starting to sort of climb back up.
We really are, yeah. With this dip that we saw, we are starting to climb back up. It is a slow climb, so we're going to be watching to see if that does surpass. I think it's 1.58%, that previous high. So keep in tune here with Canadian Mortgage Weekly. We'll update you on episode 54 with next week's bond yield. But looking at now the CDOR rate, so the CDOR rate. Now, Sam, we use this to track variable rate mortgages, right? And just to be able to figure out, is the variable rate mortgage a good deal right now? Is it smart to take one right now?
Yeah, absolutely. So we look at the CDOR rate against the prime rate, and we're seeing a bit of a change from the last week. It has gone up slightly, which we do notice that, we want the difference between prime rate and the CDOR rate to be over 2%. And I believe when we did the numbers for this, it was very narrowly over 2%. So it's a good sign, but it could be an indication for the future.
Yeah, definitely could. So as of right now, we would say that it's still a great time to take a variable rate
Mhm.
mortgage. So give us a call if you were thinking about that. Right now, we are seeing about a third of Canadians taking variable rate mortgages. So it's a great way to pay down your principal quickly while the rates are low. So
Mhm.
let's look at the next stat here and keep in touch with Canadian Mortgage Weekly. We'll keep on this CDOR rate with all of us for next week. So just to recap some of the latest from the Bank of Canada interest rate announcements, Sam, we had an announcement yesterday. We had a
Mhm.
special episode of Canadian Mortgage Weekly. Now we spotlighted that the overnight rate did stay the same at 0.25%.
Mhm.
But yeah, there was some interesting monetary policy comments there.
Yeah, absolutely. I mean, it was the last one of the year. We didn't see any change from, when we started doing those announcements at the beginning of 2021. But they did have again, some really good numbers and good information that, employment is at pre-pandemic levels, which is great to hear for our economy that, those jobs are coming back. I know, of course, there was a mention of the Omicron variant,
Oh,
adding a
yes.
bit of unsurety, but they're still keeping their target for mid 2022. So, yeah, we have full coverage of it yesterday. If you missed yesterday's announcement video and want to watch it, it should be in the video feed on this channel, and you can really see in-depth analysis of the announcement yesterday.
Yeah, absolutely. Yeah. And the next announcement is happening on January 27th. So definitely keep in touch for our special Bank of Canada episode updates next year in 2022. Yeah. And looking forward, we got the national, price average that we've been
Mm,
following here on Canadian Mortgage Weekly. And it's really, we started following it because we've seen a lot of price appreciation. We have also a lot of clients always asking us what's happening with the prices. So maybe this
mhm.
will help everyone see that, we are seeing since January of 2019 here. And again, this is sourced from mortgagedashboard.ca. We are seeing a slow, steady climb with
Mhm.
dips, peaks, and valleys right up until today, which we are sitting at, was that $716,585?
Yes, yeah, I think
Yes.
we've been staying solid, but I mean it's crazy to think that from 2019, 2 years later in January, it's almost close to being, just shy of doubling, right? At least, three quarters higher from what it was before. And we were chatting before this video, trying to extrapolate where it might go from here. And if we have a bit of a trend line, we'll see if January 2022 can get us closer to the 800,000, maybe even higher. So, we'll have to keep on pace with that.
Only time will tell, Sam. And definitely here on Canadian Mortgage Weekly, we'll be following. As you see, we did hit that high peak in March of 2021, and we are
Mm,
hitting that peak again. So let's see if we break through that.
mm,
We'll keep an eye on this. But just getting right into some of the spotlighted information that we wanted to share with you here on Canadian Mortgage Weekly this week, and that's 5 tips for protecting your credit score over the holidays. Sam, I know that over the holidays, we all like to, shop for presents, buy gifts, and it can get quite expensive. And
mhm.
with online shopping, a lot of that does go on Visas and Mastercards and American Expresses.
Yeah, absolutely. I know that, especially, if you're waiting on, maybe it's an end of the year bonus, Christmas bonus, something like that. It can be easier in the time before those payments come in to just put it on your card and focus on it later. So it's definitely not uncommon for that to happen, but we've prepared some some tax tips, some credit tips to help you keep your score protected, and some things to look out for as we enter into the holiday season.
That's right. So just the first one, Sam, keeping your utilization low. I mean, that is
Mm.
something that's, um, you know, unfortunately, I don't think a lot of people really realize how important this is.
Yeah, the
know.
utilization ratio is essentially it's how much you have borrowed against your total credit amount. And actually, it's the biggest contributing factor in what your credit score is. So, especially heading into the holidays, this is going to be something to watch to make sure that you have an idea of what that, utilization ratio, where you're at in money that you have borrowed against on your credit limit.
Yeah. And for example, if you have two or three credit cards, but one gives you the points, you
Mm-hmm.
know, maybe you have a $5,000 limit on that credit card and you bring your balance up to the $4,700. And because you have the points on that card, you
Mm,
think that you will end out ahead. And yes, you will get all those points. Um, but one thing to consider is that your other credit cards will have a 0% utilization ratio or whatever they're sitting at, but that one card will have a very high utilization
yeah.
ratio. And I've seen that really drag credit scores down. So it's a good point, Sam. Keep that ratio low, and spread it across as many credit cards as you can if you
Hmm.
need to take that extra balance out.
Right.
You know, but another good point, Sam. Don't skip or miss any payments. I know that can really ding a score. Can really put a mark on your credit score, and that mark stays on that credit score for 6 to 7 years.
Mm.
If you do miss a payment, even if it is a minimum payment of say $5 to that credit
Yeah.
card company,
Yeah,
you
it
know,
seems like it's a self-explanatory tip, but when you're sitting on the couch watching the World Juniors, the kids are busy playing with toys, it can be, easy to miss a payment, and you don't want to be on the back end, receiving a follow-up email from your bank notifying you of the missed payment. So, if it's easier for you to set up automatic payments, just so that you're at least secured at the minimum payment amount. As Joe was saying, yeah, like you don't want that sticking around on your account for 6 to 7 years just because you didn't want to miss out on the game.
yeah, exactly. That's a good point, Sam. Set up your banking so you can have them send an automatic minimum payment out every month.
Mhm.
Whatever your balance is, at least get that minimum payment paid for. And then maybe if you have a good month, you can throw some extra down on that principal, right?
Mhm.
Um, but yeah, let's look at tip number 3. These are really good tips. Pay off debts before the monthly statement. Now, why is this important?
Yeah, so the CRA, or sorry, not the CRA, your credit score is going to be based on your monthly statements from your credit cards, anything that has a minimum payment required. So what we have seen is that if you're able to pay off the amount before your monthly statement comes out, it's going to communicate a $0 balance. So it is going to help you actually grow your credit score a bit just by making that payment a bit earlier than when you get the e-statement and decide we should pay it off now. If you can be a little bit proactive, it definitely can help your credit score.
That's a great tip. All right. And then we got number 4, borrow within reason. So definitely borrowing within your means. Here on Canadian Mortgage Weekly, Sam and I never want you to borrow as much as you possibly can. I mean, that's
Mhm.
great that you have the ability to, but always borrow within your means. Ideally, if you're putting something on a credit card, you want to be able to pay it off
Yeah.
before the next statement. That's the ideal. So you don't pay any interest on that balance. Using a credit card does provide you the convenience, does
Mhm.
provide you with the points, but ideally you want to do that. If you are going to carry the balance, try to pay off in a few months. If you're not going to be able to pay off in 2 or 3 months, you need to put that on a line of credit. And then, if you can't pay that off in 6 months, then you need to look at maybe you're borrowing too much or looking at refinancing your home maybe at that point.
Yeah, that's right. That's right. I think it can be easy at Christmas to think, it's just one time a year. Well, my bank's offering me a credit limit increase. We can really do it up. But again, I think we do talk about that a lot, even, with getting a house. You don't want to be house poor. Well, you don't
Oh
also
yeah.
want to be, you know, credit card debt poor where every payment is just going to that minimum balance.
Yeah, absolutely. That can really take up a lot of your cash flow every month and can really take away some of your freedom every month
Mm-hmm.
of that, opportunity to use your cash for other things.
Mm-hmm.
Um, and looking at the tip number 5, these are all great tips. And there are obviously other tips out there, but these are some of the 5 tips specifically for the holidays. Get
Mm-hmm.
familiar with your score. Your credit available and your spending habits. It's good to just always review the credit you have available, just so you know in an emergency situation where you need to go. If
Mm-hmm.
you need to spend an amount of money, you know that you're not going to max out this card. It's okay on this card.
Mm-hmm.
Yeah, spending habits. I know that being in our industry, we see a lot of spending habits, Sam, and I know that I like to go to Tim Hortons and grab a coffee whenever possible. So that's
Mm-hmm.
one of my spending habits.
Yeah.
Um, but yeah, it's something that does add up over the long term. Any of those habits that you have,
Mm-hmm.
and it's something to look at. But yeah, getting familiar with your score, Sam. Where can folks do that?
Yeah, absolutely. It's really easy to get at least a soft check of what your credit score is. I know that a lot of mobile bank apps have a credit check feature. There's also sites like Credit Karma that are available. So it might not be the first thing on your mind when you're on holidays, but with that free time, if you do just take a bit of time to figure out exactly what's your credit score, what's your credit available, so that you don't go into a high utilization ratio. And again, checking those spending habits. It's good to kind of, as we're rounding off into 2022, to start out on a good foot of financial security, and at least familiarizing yourself with what you're spending. I know, again, as you were saying, Joe, I think coffee out is probably my household's number one expense that's non-essential, I guess. So it's good to know, yeah, exactly, like how much roughly is going towards that and be able to plan accordingly.
That's right. So,
Mhm.
um, all good tips. And if you're looking for more credit tips over the holidays, or maybe just a personal discussion about your credit situation, give us a call, 238-3479, or joe@joebladek.com, and we can schedule in for an appointment with getting started on your journey, whether it is building your credit or maybe with a mortgage pre-approval.
Mhm.
you know these days it's important to have a mortgage pre-approval. With rates going up,
Yeah.
it's really easy to get locked in at a higher rate than you would have initially otherwise have gotten if you had pre-approved your
Mhm.
mortgage beforehand, because in a rising rate environment, it's hard to predict what's going to happen.
Yeah, that's
um,
right.
yeah, but anyway, before we continue, just wanted to take a moment and introduce our co-host here, Sam Thompson. He's a mortgage agent living in Barrie, originally from Ottawa, Ontario. He's been in an industry now for almost 2 years. Sam, it's great to have you on this episode today. Some great tips to share with everyone. I mean, so great to have you on. And yeah, thanks for joining us.
Yeah, thanks for having me. It was my pleasure to be on. I enjoy doing these videos. We get to cover off information that's really important. And especially the holidays are no time to slack off too much. So it was good to get that information out. And of course, it's always good to be with you, Joe. Joe's a mortgage broker in the Barrie Simcoe area, living in Aurelia. Yeah, just surpassed 11 years in the industry, which still seems amazing to me. So Joe is the mortgage man. If you need any sort of assistance, Joe's super knowledgeable. So thanks for having me on the show today, Joe. It was a pleasure.
Right on. Thanks, Sam. Join us next week on episode 54, where Sam and I will dive into some more topics, as well as cover off these metric points such as bond yields, CDOR rates, and we'll follow these specific, news with you here on Canadian Mortgage Weekly, Canada's weekly video news podcast for mortgages. And we'll see you next time.